In 2020, there were an all-time record 480 IPOs on the US stock market, including some massive names that I'm sure you've heard of like Airbnb, DoorDash, Palantir, Rocket, and many, many more. Are IPOs actually a good investment though? And should you consider investing in a company on the very first day that its shares are offered to the public? I've analyzed data from the 10 largest IPOs of 2020 to see what the ROI would be today if you invested in each of those companies on their very first trading day. Here's what I found. This spreadsheet right here shows the 10 largest IPOs of 2020 based on the market capitalization of each company on the very first date that its shares were publicly traded. There's a number of really interesting takeaways from this that I want to highlight, but first let me explain what we're looking at. When a company goes public, the way that it works most of the time, unless it's a direct listing or a SPAC play, is that shares are first offered at the IPO price to institutional investors. We're talking about big banks, pension funds, etc. And these people have an opportunity to buy shares of the company at the listed price here. It's only then later in the day on the IPO day that the general public has an opportunity to buy shares in the company if it's a traditional IPO. And what you'll normally see is that the price of those shares skyrockets as soon as the gates are open for the general public to come in. And so this column here, column E, shows the closing price on day one. So what can we take away from this data? Well, first of all, I think it's interesting to look at the IPO dates. The 10 largest IPOs all went public in the latter half of the year, with the exception of Warner Music Group, which was in June. Not a single of the 10 largest IPOs of 2020 happened in the first half of the year. Now, I'm sure there's tons of research out there on this, and it's probably not a causal effect. What's more likely is that the executives of these companies decide to go public in the latter half of the year for some reason or another. But in any case, it's interesting to note. Another interesting point, of course, is that each and every one of the 10 largest IPOs of 2020 shot up in price dramatically on day one of trading, with the minimum gain over one day being about 20%, 19.5 here and 20.5 here. But of course, that's based on the IPO price, which is only available to institutional investors. And so you can get a sense here of just how much money is being made in the span of a few hours on one single trading day, which is crazy. So if you're an institutional investor and you get an opportunity to buy into Snowflake's IPO at the IPO price, then you could sell out at the end of the day for over 100% profit in 6 hours or something like that, which is absolutely nuts. It really makes you question how fair it is for retail investors when we're looking at the traditional IPO method. Now, of course, with some of the more recent IPOs, like the Coinbase IPO, that was a direct listing, and so shares in that company were made available to institutions and retail investors at exactly the same time, which of course is much more fair. Anyways, assuming that they did not unload their shares after the very first day of trading, but held on until today, what would the return on investment be? Well, at the IPO price, we're looking at significant returns on investment, with the lowest being 23.88%, which was GoodRx Holdings. But all of these are up significantly. Palantir is up 232.97% from the IPO price. It didn't have as big a bump on the first day as some of the other IPOs, but it sustained that growth and kept going. What I'm really interested in now, though, is what about retail investors looking to buy into an IPO? What's the ROI going to be for them if they don't have access to the IPO price? And when we look at the ROI from the day one closing price to the current market price of these companies, then it's a bit of a mixed bag. We're not looking at massive gains all across the board, and in some cases, we're even looking at some losses, some pretty significant losses. So let's look at GoodRx, for example. The IPO price was $33, but if you bought shares of that company at the closing price on the very first day of trading, you would have paid $50.50 per share. Now, based on the current market price of the share, which is $40.88, you would currently be down almost 20% on that investment. Same thing applies with DoorDash. It opened at $102 for institutional investors, but if retail investors were buying in at the end of day one, they would have paid almost $190 per share. Now, at a current market price of $160 per share, the DoorDash IPO has left those investors down 15%. The third company that would be currently down if you invested at the day one closing price is Snowflake. Now, it opened at $120 as an IPO price, and more than doubled in the first day of trading to over $250 and has since pulled back to about $240 per share. So you're looking at about a 6%, 6.29% loss on that investment if you had bought in on the first day. But then again, even if you didn't have access to the IPO price and you had to buy in as a retail investor at the closing price on day one of trading, some of these would still be up significantly, mainly Palantir, which would be up 154% if you had bought it at $9.50, which was what the stock closed at on the very first day of trading. And so what's the key takeaway here? Well, really, it's a bit of a mixed bag. It seems as if you have an opportunity to buy in at the actual IPO price as an institutional investor, you have a significant advantage over everybody else, and you're much more likely to make your money and make it quickly. But if you're a retail investor looking to invest in an IPO, it's not guaranteed that you're going to make a lot of money. And these are the 10 largest IPOs of 2020. If you go further and further down the list, some of the other ones get quite suspect. So what am I trying to say here? Well, one of the very key takeaways of this for me is that there's so much hype around IPOs that it seems like, especially on day one of trading, people are willing to pay practically any price to invest in a company if it's hyped up and if they think they like the stock, regardless of what the underlying fundamentals of the business are and the business model and all that. And you can see that in some of these cases where the price of the stock shot up by over 100% on the very first day of trading. The institutional investors make bank from that, and the retail investors could potentially be left holding the bag, like they were with DoorDash, with GoodRx Holdings, and with Snowflake. Now, I want to leave you with one more thought. Of course, 2020 was the all-time record for IPOs on the US stock market with 480, but the previous record was set in the year 2000 with 237 IPOs. And that is significant because that was right before the dot-com bubble crash and the stock market crash of the year 2000, which persisted all the way until the year 2003 until it started rebounding. Food for thought. Anyways, thanks for watching. Hope you enjoyed it, and I'll see you next time.